Hello again, everyone. In this technical analysis of the stock market video, I call it animal spirits because there's nothing like a full moon and a surprise jobs report to bring out the animal spirits that we saw on Friday as this market continued to push higher. And yes, we have the Nasdaq Composite and the Nasdaq 100 pushing into new all-time high territory above that February high. All right, before we further go into the video, let me just quickly reference, if you find this very interesting and find the information helpful, head on over to joehenches.net. Check out the website, check out the membership. All right, everyone, let's get back to this. The NASDAQ Composite was up 324.21 for the week. This is a weekly view. I still believe, even though we're punching into new highs here, that the bull market finished at the February high. And what we've got going on has to now be a flat, okay, a large flat. Now, the thing about corrective patterns, they can become more complex. First of all, we need to complete the flat. But once you have a completed flat or a zigzag, just like I'll show you on the daily, you can continue to get more complex and connect to another corrective pattern, etc. But first things first, here's where we're at. We've punched to new highs. I believe this is what's going on. Let's take a look at the daily view. And I'm going to go back to the arithmetic view here so we get our math right. Okay, so here's the daily shot, and here's what I think is happening coming off the low. I think we have a WXY connecting two zigzag patterns. Okay, I do like the way the slope of this first zigzag is this kind of steepness to it, but the slope of the second zigzag is flatter. I like seeing that in a zigzag. Okay, so that is encouraging to me in terms of the standpoint of, are we getting close possibly to the end up here? But what you're really looking for is you're looking for 5 waves, you're looking for a pattern to complete. And I think we're getting close. We've got an ABC. This is a leading diagonal within A. And there is a small 5-wave move in here. If we go in and take a quick look at, I think it's the 30-minute, 2-hour chart that I've got in here. There's a little 5-wave move that's going on for this C wave. Now, even though I think that this is complete, okay, or very close to being complete, do you automatically just turn and think about going short? No, you have to wait until the price action starts to turn over and break down. Okay. Now, the other thing I just want to mention about a large flat like an A, B, C. When you move into a flat, it's a 3, and then a 5. Okay. Now we were counting this as a 5-wave move because you could count it as a 5-wave move. There was the ability to have a little 4th wave down in here and a very abbreviated 5th wave. But I believe you could also count this as a 3-wave move. And that's what I'm going with. And I think we have the 3, and I think we have the 3 right here. Now, can this push, when you have a flat, the B wave can go above the beginning of wave A by, 138% of it or so. There is no rule that says it can't be X. So could this continue to push higher still? Yeah, it's possible. Okay, so again, just like I said about breaking down, that's what you got to be on the alert for. What am I talking about here with the dotted lines? Right here, this is where we last saw the extreme that we're seeing right now in the 10-day put to call ratio, the equity put to call. Let me pull that up. Okay, so this data comes from the Chicago Board of Options Exchange. Okay, and the first column here, column B, this is the actual readings. This is the put to call ratio, equity only. Okay, so this means 41 puts for every 100 calls. When it gets below 50, when it gets below 50, I color it dark, like very dark red. Okay, I've got a red here when the 10-day moving average gets below 0.55. And again, this is just my, kind of my stop sign type of, nomenclature that I've used. And I've got the data in here all the way back into 2006. Okay, so for the first time, we are now seeing this get down to a level of extreme on the 10-day moving average of 0.49. We have not seen that since all the way back up here in January. And that's where I got it highlighted. This is where we saw it in January. Now we continue to get extreme daily readings all the way up through the high. We've been getting extreme daily readings in here, but what I'm highlighting is the 10-day moving average of the readings. Okay, so that's what got my attention this week, and we'll see how many more of these we get, but we're starting to get back to just like what we got in the January, February high in here. All right, that's the put to call. The other flag that's kind of waving for me is the high lows. So this is the Nasdaq Stock Exchange. Okay, this is a net of the 52-week highs minus the 52-week lows, and right here, this is January. Let me bring in this little data window so you can see what I'm talking about. So right here, this is January 17th. You see it closed at 379. That's the high. Okay, so then we got a lower reading as it continued to push higher on February 19th, 266. You can see what we've been getting in this whole push to the upside in here. The highest reading that we got in here is 123, and on Friday it was 108. We're not even coming close to the readings that we got in terms of the high-low back in February and January. So we're not confirming with this measure of internal strength, we are not confirming this move at all. Okay, so that's another flag that's hanging out. Let's take a look at oil. Okay, so I have switched over to using USL, United States 12-month oil ETF, as the main ETF I have for tracking oil. And I've done that because of the problems that they had and they ran into with USO. And then when it did a 15 to 1 reverse split, I was like, okay, let's go to something else. So this is what we've got. And right now, it looks like we're getting a nice little 5-wave move. We've come up, we've gotten above the prior 4th wave high in here. And this is the 4th wave in the previous intermediate trend to the downside. And that was my initial target of pulling back to this level. Now, after we get a 5-wave, once we get this complete, which it's very close, okay, I'll be looking for this to roll over and pull back in a wave 2. So I think this could be the start of something. And, you know, it's interesting when you look over here at the futures contract. This is the West Texas crude oil contract. This is the continuous contract. So what it does is it automatically rolls from the most front month into the next front month as each month expires. Okay, so that's what's going on. Here's the big problem that happened back in April. The oil actually went negative, which just blew everybody's mind, and went back to minus $37 a barrel. Okay, so now here's what it's done. Since then, it continues to rally up, and it closed on Friday at $38.94. We're very close to closing this gap. I wouldn't be surprised to see us close this gap. And what's the low here? The low is 41.07. So let's say we go to 41, and then we turn around and correct in here. Now, because of this mess, I don't really mess with this a whole lot. I mean, yeah, what you could do is I could lower this down to where 0 is down like this, and then you can kind of track it, which starts to look a little bit more like what we just looked at with USL. So, all right, that's it for today and for this weekend. I hope you found that helpful. If you did, hit the thumbs up. If you're not a subscriber to the channel, hit that subscriber button. And again, if you'd like more information like this on a daily basis, head on over to joehenches.net and check out the website and check out the membership. All right, everyone, have a great rest of the weekend and a great week. We'll talk to you on the next video.